No, I think it's way deeper than that, Jeremy. I think there's something in store for gold, which is what? The only other tier one reserve asset in the world that all the central banks are buying hand over fist. It would benefit them all of the central banks. And maybe that's what the plan has been all along, not sure. But why else would the most powerful bank on the planet, the most powerful, the BIS, reclassify gold as the world's only other tier one? Really lost a good deal of their luster. And much of the world over the last few years has chosen to let those treasuries that they were accumulating to finance our debt roll off their balance sheet and replace them with gold, because after all, gold is the only other tier one reserve asset as reclassified by the BIS.
As the U.S. government looks for ways to cut costs, it may sit on an untapped $800 billion windfall. However, some analysts warn that the long-term consequences could outweigh short-term benefits. Speculation is mounting that the government may adjust the official value of its gold reserves. The U.S. Treasury holds the world's largest gold stockpile, 8,100 tons, but its valuation has remained unchanged since 1972, when it was set at just $42 per ounce. Speculation intensified last week after newly appointed Treasury Secretary Scott Bessent said he would monetize the asset side of the U.S. balance sheet. AndySchectman, president of Miles Franklin Precious Metals, breaks down the implications of a potential gold revaluation. He highlights that the U.S. gold reserves have not been audited since 1956, raising concerns about transparency and confidence in the financial system. Schectman sees this as part of a broader shift in global monetary policy, where U.S. treasuries are losing their appeal, and many nations are turning to gold as a preferred reserve asset. He emphasizes that gold, reclassified as a Tier 1 reserve asset by the Bank for International Settlements, BIS, in 2019, now stands alongside U.S. treasuries as the only other top-tier financial instrument. The U.S. government has run budget deficits yearly since 2001, leading to a steadily growing national debt. Debt held by the public has now reached $28.9 trillion, equivalent to 100% of GDP, and the Government Accountability Office projects it will hit a record 107% of GDP by 2027. Additionally, federal agencies reported $236 billion in improper payments in fiscal year 2023, with most stemming from Medicare, Medicaid, and unemployment aid. Schectman argues that revaluing gold may be considered because traditional methods of managing the debt crisis, such as printing money or defaulting, are no longer viable. In his view, a gold revaluation could be a strategic move to restore confidence in the financial system while addressing the country's mounting fiscal challenges.
Yeah, well, I mean, the gold is supposed to be there. The certificates could be redeemed for gold at any time. And of course, it hasn't been audited since 1956, I believe. Doesn't inspire much in the way of confidence whatsoever. And, I found Scott Bessent's comments very interesting, because if you take a look at the balance sheet of the U.S. government, it's somewhat nauseating, if you will. Roughly $5 trillion in assets, of which the largest, over 40%, being student debt. Can't monetize that. The second largest would be military, the bases and the guns and the bullets. You're not going to monetize that. Land is number 3, I suppose you could. But when you think about gold, which is held, to your point, at $42.22 an ounce, and in the rest of the world, $35 an ounce, in what is called universally on central bank balance sheets, you can't make this up, Jeremy, the gold revaluation account. Right. That's the name of it, the gold revaluation account. And, having the head of the Dutch National Bank for the last 2 years be screaming that we should revalue gold, members of the Bundesbank doing the same thing, and closer to home, Senator Cynthia Lummis from Wyoming, who advocated for revaluing the gold that the Federal Reserve is supposedly holding on behalf of the Treasury to a level sufficient enough to provide liquidity to buy Bitcoin for the strategic Bitcoin account. And of course, one of my favorites, a lady I just interviewed with, Judy Shelton, is advocating for issuing treasuries pegged to gold and redeemable in gold. And so a lot of these things are coming together. There's a lot more that we can talk about this. But for many, many years, gold was an afterthought in this country. And it's not until just recently, like now, that you're beginning to hear about it. In fact, most of my career, Jeremy, the Federal Reserve, the United States was a net exporter of gold. And since November, I wonder if that November is ironic that coincide with the election. We have become net importers of gold. And well, there's a lot more to this that we'll talk about. But the bottom line is that gold has kind of been usurped for central bank financial instruments. And it looks like things are starting to somewhat come full circle in an environment where the treasuries have lost a good deal of their luster. And much of the world over the last few years has chosen to let those treasuries that they were accumulating to finance our debt roll off their balance sheet and replace them with gold, because after all, gold is the only other tier one reserve asset as reclassified by the BIS in BS, there's a Freudian slip for you. BIS in 2019 as the world's only other tier one reserve asset alongside of U.S. Treasuries. It's doubled the performance of the 10-year Treasury gold has over the last 25 years, and maybe most importantly, carries no default risk, no inflation risk, and no sanction risk. So yeah, I think we're beginning to see gold become center stage, and I'd love to continue to pull on that thread if you want about what's going on right now with all of the gold coming into the country, the difficulty getting it out of the LBMA and all the things associated with it, and maybe with what Scott Bessent is feeling about remonetizing something on the asset side of the balance sheet. A nonpartisan group in Washington says by 2031, 100% of tax revenue would go to pay just the interest on the debt and mandatory entitlement spending that he won't touch. And it's all off balance sheet, like Medicare.
Former U.S. President Donald Trump has declared that BRICS was created for a harmful purpose and claimed that most people do not support it. He stated that BRICS is dead and reiterated his threat to impose a 100% tariff on BRICS nations if they attempt to replace the U.S. dollar with another currency. Earlier in January, Trump had already warned that he would impose tariffs on BRICS countries if they moved forward with an alternative to the dollar. AndySchectman has long cautioned about the global de-dollarization trend. He recalls that when he first spoke about BRICS nations shifting away from the dollar in 2019, many dismissed his concerns. However, he now believes that recent developments strongly validate his warnings. Now, let's redirect our attention to a video.
Part of me feels it's not, and part of me feels that's why they're doing some of the things they're doing. And I don't want to, look, in 2019, I started talking about the BRICS when no one else was. People told me I was crazy. Maybe I was stupid just to say it out loud. De-dollarization, Saudi Arabia pivoting, the BRICS. And I said it in 4,000 YouTube videos over the last 5 years. I feel there's something else happening right now that kind of answers that question through the back door. I mean, it doesn't inspire confidence that we haven't audited it. And when guys like Ron Paul advocated for it, he was shot down. Does that mean it's not there? I don't know. I think it's a 50-50 bet at best, certainly. If it were there, why not just audit it? It belongs to the American people. It should be held in 2 locations, the New York Fed and Fort Knox. If it really is there, it shouldn't be overly burdensome to audit, especially nowadays. That certainly, I think, makes people wonder. But if you look at what they're doing right now, there are things pointing to massive gold acquisition just since November that maybe is a stopgap for that. Now, look, there's a fine line between conspiracy and reality, Jeremy, and I think we're treading that line. But just since November, since we have become net importers of gold rather than net exporters, the United States has brought in over 12.5 million ounces of gold and over 45 million ounces of silver from the London vaults into the U.S. vaults. JP Morgan is set to deliver $4 billion with a B of gold into the COMEX for the February contract. And Blythe Masters, who used to run the trading desk for JP, you can Google it, it'll pop right up. She said long ago, JP Morgan does not buy gold for themselves, it's for customers. Now I ask you, what customers got $4 billion in their back pocket to buy gold with? Let that one sink in for a minute. And there are many other things related to JP Morgan. I might add just one more. You know, they paid a $920 million fine for manipulating the metals market. And it always chafed my rear end that they were allowed to continue to be allowed to be the custodian of the world's largest silver trust, SLV. I mean, that just didn't make any sense to me. They They paid a $920 million fine, the largest fine ever handed out by the Justice Department at that point. And yet their trading desk made $1 billion that year. Slap on the wrist, you walk away 80 million up, and you still get control of the ETFs. HSBC Bank always controlled GLD, but guess what just happened recently? Oh, that's right. JP Morgan now controls GLD. So you have BlackRock and JP Morgan holding SLV and GLD. And when people have asked me over the years, do you think gold will be confiscated? I said, no, I don't. I think if they wanted to take the gold, if they wanted to have the lion's share of it, all they would need to do is say, let's take the ETFs. Now, nobody except the insiders can pull gold out of the ETFs. And I'll mention about that when I'm done. I know I'm kind of going a little further ahead of script here, but it's important. And so the insiders are the only ones that can take metal out of the ETFs. You and I can't. So if indeed they were to close those two accounts, be sitting on this massive stockpile of gold, where right now, in the two vaults that JP Morgan owns, one in London, one in New York, they possess more gold than over half of the dang G20 countries because of this custodianship. They could close those programs, look the world in the face and say, what? We didn't break any laws or infringe any civil liberties. We have the right to do this. We're closing the fund. The money that people had invested in gold is now in their money market accounts Monday morning. They're free to go buy physical gold and silver. It would give them the ability to have their cake and eat it too. Now, am I extrapolating? Yes. Do I know that this would happen? No, but it's a little bit uncanny. And along those same lines, since gold has been on this wild tear, right? It's a little weird that 16 tons have come out of GLD just recently, fallen out. In other words, the conventional wisdom is, well, it's a strong dollar, it's high interest rates, it's profit taking.
The gold market has always been a magnet for unconventional theories, and recently one such idea has captured Wall Street's attention: the potential revaluation of U.S. gold reserves. Speculation is mounting that the administration could take this step as a means to alleviate the national debt. In addition to this, there is growing discussion about a proposal that would encourage non-residents to exchange their current holdings of U.S. Treasury securities for a 100-year bond with a 0% coupon. This combination of strategies is seen as a possible way to manage the country's financial obligations while addressing concerns over the long-term sustainability of its debt burden. Do you think the U.S. will revalue its gold reserves to ease its debt crisis? Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.